Welcome to ForexTV.com's PM Exchange. It's Friday, November 30th. I'm Remy Hokie. Today I'm joined by Derek Frey, head trader at Odom & Frey Futures and Options. Derek joins us remotely from Atlantic Beach in Florida. Good afternoon, Derek. Thanks for joining us today.
Good afternoon, Remy. Thanks for having me.
Well, in the last trading day of November, we're seeing the U.S. dollar rally against the major currencies. With fiscal year-end and month-end position squaring, there has been plenty of volatility on the day. After seeing corrective dollar strength in the previous session, if you could help us gauge today's price action and shed light on whether dollar gains are a result of position squaring.
Actually, no, I really don't think it is. I've been, advising our clients, and as far as my own fund that I manage is concerned, I've been buying dollars against the majors and some of the minors, for that matter, for the last almost month now. And you saw the turn in the dollar reflected against the Canadian and the Australian about 3 weeks ago. And I think what you're seeing now, frankly, is a more broadening out of the rally in the dollar against these other majors. And I think you're going to see that continue. I mean, frankly, all this media attention about the dollar being dead is, I believe, very overblown and indicative of a turning point in the market. Everybody agrees that a certain market's going to go a certain way. You can almost always bet that it's not. In trading, especially, we're taught that the crowd is always wrong. So when the crowd's screaming in unison, one particular direction or another, that's, for me, one of the most clear, signs of a turning point. And like I said, we've been positioning long for the last month, and have done extremely well with it.
Well, let's take a look at technicals for the U.S. dollar. If you could give us your levels of support and resistance for the major currency pairs of euro dollar and dollar yen.
Okay, as far as the dollar yen is concerned, I'll start there. Clearly the floor that we put in right around 107.5 earlier in the week has been holding up, and we've been taking long positions from about 08. And really expect to see this market continue to push higher. Keep in mind that the big rebound that we're seeing is the carry trade being put back on. And as the stock market continues here in the U.S. and around the world, for that matter as well, you'll see more and more money being pushed back into that carry trade. And I'm targeting a move in the near term in the yen to at least 113, and I think 115 is a reasonable medium-term objective. Looking at the euro, we've been building short positions in that from 48.5 on down here, and we're looking for the market to move into the lower 40s. And frankly, I think that it probably can go all the way to 38 before we see 138 before we see any real significant bounce.
And speaking of the yen, we've seen the Japanese currency as well as the Swissy under pressure earlier in the day as risk appetite increased. But nearing the end of the New York session, equities are pairing earlier gains after the surge seen in Tuesday and Wednesday's session. And euro yen is now trading in the middle of the day's range around 162.60. So if you could give us your forecast for the euro yen cross.
Well, for the euro yen, that's frankly one of the pairs that I'm most active in throughout each trading day. I day trade the euro yen more than any other currency pair. So I don't have a huge long-term outlook, again, because I'm in and out of it just about every 15 minutes. But looking near-term, I do expect the stock market to continue to stabilize. And as you kind of alluded to, the euro yen and, for that matter, the pound yen also are very highly correlated to the S&P. One thing that I will mention, though, that while that correlation has been in existence now for many months, actually today I noticed that in particular the euro yen started to decouple from the S&P more than I've seen in recent days. So you could start to see those two markets, that correlation, I should say, diverge away from each other, at least in the short term. But frankly, I am looking for a push above 165 euro yen cross, looking ahead into next week. Again, not looking for a huge long-term move here, because I am very concerned about the holiday season in terms of how the retail numbers come in and everything. I think you will see an early Santa Claus rally here for the next couple of weeks potentially, but as we get ever closer to Christmas and the numbers we're expecting to not be as good as the current expectations are, we could start to see things drift back down as we get ever so much closer to Christmas.
And as the greenback gains strength, there has been selling in the so-called commodity currencies. Fixing demand for U.S. dollars have pushed dollar CAD higher on the day. The volatile pair is managing to hold above parity, but going ahead into the coming session, both from a fundamental and technical perspective, what price action do you expect to see for dollar CAD?
We frankly, had forecasted expecting the U.S. CAD pair to move back to parity. We built a long position way down at 93.44. We've now cleared out of it. Our models indicate that it is possible that we could see 102, possibly as high as 105, before we see the next turn back down below parity. But frankly, I'm not getting super strong signals of much more continuation at this time. So I'm really looking for a new short entry signal in that particular pair, much more so than a continuation above parity for the longer haul. As you mentioned, that CAD is very much a commodity currency, and we do kind of expect to see slowdown in some of the appreciations in the commodities across the board, in particular in metals, really are not, and grains for that matter as well. We're not forecasting huge upside continuation moves from the levels that we're currently at.
And last but not least, let's take a look at the week ahead. Tomorrow is December, so that means the first Friday of the month. Next Friday is Non-Farm Payrolls Day. The week ahead also brings forth the rate announcements from the Bank of Canada, BOE, as well as the ECB. So Derek, how should Forex traders be pricing in next week's slew of events?
Well, of course, as far as the ECB and the Bank of England are concerned, the FOMC would very much like them to cut rates in concert with their expected rate cut on December 11th. And we do expect that quarter of a point that everyone's talking about here in the States to come through. I do expect them to deliver that on the 11th. I don't think you're going to see the half a point that a lot of people are starting to say is going to come. If they're going to do anything a half a point, I believe it's going to be the discount again. But we'll see that the Frey continues to indicate that it seems to be more concerned about than anything else, probably rightly so. So I'm not convinced that they're going to cut rates, but at this point, even if they just held rates steady, it could be seen as dollar positive, even in the face of a rate cut on over here. So that's another reason that we continue to position long dollars against just about every major currency. The only real exception being the Australian and the Kiwi to some degree. But really, I don't think that the rate cut is going to have the negative effect on the dollar that it has in the past. The FOMC rate cut. As far as the NFP report is concerned, that's such a wild card every month that I at this time don't have any forecasts for it. But I think you will see it one way or another interpreted over the longer haul as being positive for the dollar.
Okay, Derek, thank you very much for joining us today.
Okay, you too. Thanks, Remy.
This has been your Forex News with Derek Frey, head trader at ONF Futures and Options. And now we have your equities and commodities wrap up for the day. In equities, the major indexes ended the month of November with losses, but ended the week with gains. In another volatile trading session, the Dow paired earlier gains of over 150 points. At the opening bell, the market was encouraged by overnight comments from Fed Reserve Chairman Bernanke as a signal that rate cuts could be on the way. Meanwhile, there were jitters in the tech sector over Dell's weak forecast. This led to the decline on the Nasdaq. And in today's economic data releases, personal income rose 0.2% in October from the 0.3% rise in the previous month. Consumer spending weakened, increasing a mere 0.2% for the month. Meanwhile, inflation rose only moderately. The Fed Reserve's preferred gauge of inflation, the PCE price index, which excludes food and energy costs, rose 1.9% in October. And November Chicago PMI increased to 52.9 from 49.7 in October. The figure topped expectations for a lower reading. And at the closing bell, the Dow Jones Industrial Average gained almost 60 points on the day to close at 13,371.72. The tech-heavy Nasdaq fell nearly 7.5 points to end at 2,660.96. The S&P 500 gained 11.42 to close at 1,481.14. In the fixed income market, U.S. Treasury bonds ended mostly lower on the day. The possibility of a Fed rate cut led to an advance in equities today. The benchmark 10-year Treasury note fell with the yield at 3.97%, up from 3.93% late Thursday. The 30-year bond fell with the yield at 4.4% from 4.35% yesterday. And the 2-year note rose with a yield of 3.04%, unchanged from yesterday's session. In energy, crude oil futures declined, falling below $90 a barrel. Prices pulled back to end at their lowest level since October 24th. The decline in crude futures stems from expectations that OPEC may increase oil production next week, and also as oil demand in the U.S. may fall given the slowdown in the economy. Earlier this week, there were concerns over supplies due to an explosion along the U.S.-Canadian oil pipeline. The Enbridge pipeline system has been restarted and is now functioning at 80% of capacity. January crude ended down by $2.30 at $88.71 a barrel. In other petroleum products, December RBOB gasoline lost 0.57 cents to close at $2.25.91 a gallon. And December heating oil fell 4.75 cents to end at $2.52.96 a gallon. Meanwhile, January nat gas fell 15 cents to end at $7.302 per million BTU. Over in the metals complex, gold futures ended lower on the day and also on the week. COMEX gold has declined $42.70 an ounce this week. February gold fell $13.20 to close out the session at $789.10 an ounce. In other metals, March silver fell 28 cents to close at $14.165 an ounce. December copper rose 9.35 cents to $3.1570 a pound. And that wraps it up for today's edition of PM Exchange. Thanks for joining us. Tune in Monday morning on the first trading day of December for your latest update right here on ForexTV.com. Have a great weekend.